share any idea that you feel in this market is top on your watch list and any interesting result bet that you have come across. And if anyone in the group would have any comment on that idea, they can do it right away.
Uh, sure, I don't mind starting. So last time I think I had pitched the idea called PDS Limited, which is a fashion outsourcing company. So I will just provide an update on what's happening, what happened over quarter two, and what
Uh,
can we expect going forward.
just sorry to interrupt you. Just sorry to interrupt you 1 sec. Aryan bhai, is it getting recorded now? Is the recording on?
Yeah, it is on. Yes, yes.
Perfect, perfect. Sorry, Vatsal, just wanted to check in. Yeah, you can continue.
Yeah, so just a small brief on PDS, so if people don't know about it, it's a fashion outsourcing company. It caters to all your big retailers like Walmart, Costco, Primark in the UK and the European regions. So how they work is they don't own the manufacturing facilities, but they provide designing and other services, and they get the manufacturing get it outsourced, and they also provide a lot of value added services to these retailers and fashion brands. So they over the past 2 3 years they were facing some problems in space scaling up new businesses, but I think over Q2 there was some progress made, and the management is confident of scaling up the businesses as they've added a lot of new clients. So key things to track over the next 1 2 quarter is how management scales up the new business and how the operating leverage plays out, because it's a low margin business but high asset turnover. So management is guiding a 4 to 5% operating margins, and currently it's at somewhere around 2%. So we have to see how they scale it up because it's a unique business model and not very easy to copy.
Excuse me, Vatsal. Hello.
Yeah,
What the company is called, Vatsal?
it's
Can
PDS Limited, PDS.
PDS. Okay, right.
Yeah,
Yeah.
Uh, Hi, Vatsal. I just had a question.
yeah,
Uh, am I audible?
yeah,
Yeah,
you're audible.
Vatsal, they have the brand management business also, right? Which this I think started 2 years back, 2 to 3 years
Yeah,
back. They got into
yeah.
this. So, is there any margin accretion that you expect from that kind of business? Because I am assuming that that business would be more margin accretive relative to your normal vendor.
Yeah, yeah,
Being the
absolutely.
being the third party between the vendor and
Yeah, so brand management will always be a bigger business because you have an IP here. But the problem is that they face a lot of so they acquired a brand called Ted Baker, and the people they
yeah.
were going to supply Ted Baker brand, they went bankrupt. So there have been a lot of
Hmm.
issues now out there, and they have pretty much got slow over there. So they don't want to go very aggressive there. They want to get those things right, and when they find the right partnerships for those brands, then only they'll scale it up. So I don't think in next 1 year you will see major scale up in the brand management business.
Okay, because I've looked at this business before and it seems like everything goes right, but the margins always remain very limited because of the nature of that business, right? So in that sense, margins are not sanctimonious in long run. Like for you to bet on it, the margins will always be slightly volatile.
Yeah, so it is always going to be a lumpy business, but the thing is, when right now the worst things that have happened have already happened. So if anything good happens, it's only going to be accretive for the margin. So once you start scaling up your new businesses and the volume also goes up, so your 2% margin can easily go to 4% in just 2 3 quarters.
Right. And what about the manufacturing business? I think in Norlanka they acquired, right?
No, so they
Or
acquired
did
a
they acquire some
manufacturing unit in
manufacturing business?
India. So they acquired a small
Okay.
manufacturing unit in India called Knit Gallery. So
Yeah.
2 3 years back, all the manufacturing businesses were making losses, but they've already turned around, and every manufacturing business is profitable now.
Okay. And that particular unit will be for in-house manufacturing only, right? Whatever
Yeah,
orders they get, they'll be
yeah,
using
and it's
that.
not meaningful. Also, it's only 5% of the revenues. So
Hmm.
manufacturing is just to show the retailers or the fashion brands that they know how to operate in this industry.
Yeah, but so just last question on this. Do you think they'd be more interested in moving towards manufacturing?
No, no,
Because
not
then
at
because
all.
then your
So the management is
quality of
very
asset and
clear.
your entire okay.
No, management is very clear of not getting much into manufacturing. It's always going to be a very small part of the business.
Okay. Okay. Thanks.
Vatsal, I had looked at this some 6 7 months back. A few things I would like to share and few questions I have as I have not looked in last 6 months. So remember they had a 5x5 or 3x3 5-year vision and 3-year vision,
Yeah,
and US was a key part of that growth. And what they say is in US the deals take time because these are more CXO level deals. But once that happens, you get big deals. But the moment when they were expecting US to fire and they have done all the investments, this whole geopolitical thing and Trump tariff issues, all of that happened. So one question is, in last 6 months, has anything changed where they're expecting that growth to happen in US? That is one question. And second one, observation. If you see, they have this whole entrepreneur model, and they had some 70 plus entrepreneurs. It had never happened in the history that they ever consolidated those entrepreneurs. And I think they were having a lot of cost pressure. And in last 5 6 months, they have started consolidating the entrepreneurs, getting rid of loss making entrepreneurs or merging them with the profit making one, which tells the kind of operational cost level challenges they are facing. So any discussion has happened in last 2 quarters on these points? If I'm not updated, so it would be great
yeah,
to
yeah,
know.
definitely it has happened. So if you see, they were saying that in H1, in Q2 they've still grown 26% in the US, and since they have a more diversified sourcing base, they're less likely to be affected by tariffs. So that is happening. But what they're saying is the key accounts they were very much keen on, that is Walmart and all. So they've already opened accounts and small batches have already started going. But the big volume is being expected to come in FY27 or somewhere, something like that. And coming to that entrepreneur model, yes, they have pretty much said that they've made mistakes out there. So what they've done is, any small loss making verticals, they are merging it up with the large verticals, so that cost can be easily absorbed and the profitability can be scaled up. And any businesses that they think that it's not making sense, they're completely shutting it down.
Okay, and they're still sticking to that 28,000 crore GMV, that
So
5-year
time
target.
frame. So what? When I interacted with the management, so they said that maybe there might be a 1 or 2 year delay.
Got it, got it. Thanks a lot, Vatsal.
Thank you so much for starting in Vatsal. Just one clarification that I would like to do. If any of you have an idea which you do not want to share on a recorded platform, since it is getting recorded at this point in time, towards the end of the call, we also shut the recording and we have an open conversation. So you can say that you would like to discuss in the in a non-recorded version, and we'll park your idea for later. So I think this is some of the people who have texted me saying that this could be a good idea. Maybe we'll always do that. We always do that. Like we have one unrecording session. If you have anything to share which you do not want to get recorded or transcribed, we can always do it at that point in time. Yeah. So I think that's just wanted to highlight it. The next, may I request maybe Varun to share your ideas and what is it that you are kind of trying to do.
Yeah, hi, Shobit. Actually, I just stepped out of my house. I'll just flash back in a bit.
No worries, that's fine. Will it be okay, Vinay to Vinay Ambekar ji to take it up instead of Varun for now, and maybe Varun can do it later.
Yeah, sure. So the portfolio is so down. Portfolio companies are so down that everything looks good to be adding at this price. But if I were to pick and choose two or three out of them, what I particularly like right now is a company called GNG Electronics. So they are India's largest laptop refurbisher. And one interesting anecdote is that I have been their working capital banker here in Dubai. And when the proposal initially came to me, I just brushed it aside, saying ये क्या घटिया business है, laptop क्या refurbishment, इसमें क्या है. So thankfully, the business guys, they insisted that I should visit them, meet them. And when I did that, and when I interacted with them, and when I saw the facilities that they have here, I actually became a convert. And it was unlisted at that time. And since then, I've been tracking their performance. This would be about approximately 2 3 years back. And they got listed recently in July. And the IPO price was 235, if I remember correctly. Currently, it's hovering around 330, 340 thereabouts. The business is very interesting in the sense that they are able to offer a genuine laptop at 30%, roughly one third of the price of a new laptop, and with a 3 year warranty. So that goes to a long extent in demonstrating their confidence in the kind of refurbishment activity that they have performed on the laptop. And then if you think about it, if I'm a SME or a mid corporate, and if I'm getting something at one third the cost with a 3-year warranty, I mean, it's a no brainer to try it out. So penetration in India has been increasing. Their major market, however, continues to be overseas, because there's a culture already in US and Europe since a few years, where the companies they take these IT infrastructure more on lease basis, and then every 3-4 years they change it. So this ensures a steady supply of old laptops for GNG to be able to refurbish. And they don't have any qualms in using used laptops. So in fact, some companies like HP and Lenovo, who have certified GNG's facilities, they have their own internal mandates as well. That 30% or 40% of their laptops which they are using internally have to be the used ones already. So it's a very interesting company, largest, and they have done 1,500 crore turnover last year, and maybe on track to do maybe close to 1,800, 2,000 crore this year. So this kind of turnover, from refurbished laptops is doing it at scale. So definitely there is an element, a huge element of trust that they have been able to generate. As an individual investor, individual user, probably we may hesitate to buy used one. But actually, I bought one of theirs just to test it out, and for more than a year, it's been working fine. So that's one company which I wanted to talk about.
Sure. And
Otherwise,
yeah, sorry, go ahead,
yeah,
Vinay.
sorry, please. Any
No, no.
question around this?
Yeah, I just wanted to understand on the result, right? So, how has the recent results been, Vinay? I mean, I know you have been tracking it very closely. So,
So
yeah,
So they are indicating a growth of 20-25% on top line. So basically, this is not a company where there will be huge operating leverage. Okay, yeah, that is a good point. A few risks around this also is that it's more OPEX driven, more manual driven. So in order to expand facilities, expand their business, they have to set up new facilities, take new technicians, train them. So इसमें कोई operating leverage जैसा angle नहीं है, because it's more OPEX driven. And second risk in this is that they will continuously need outside capital for growth, because it is not such a highly cash generating business. So they did the recent IPO to pay down debt, but and it has come down to very low levels. I think 400 crores, say it came down to 60 crore net debt. But as they grow, they will have to take on additional debt. So these two issues are there. Now their point is, how do they bring in margin improvement? Because they have said in the con call that they will attempt, they endeavor to do 75 basis points to 100 basis points improvement every year. So this is an element of the trust that they bring to the table. So let's say some customer is now a repeat customer. One angle is that they will be earlier. Let's say they were using an i3 laptop. 3 years, 4 years later, maybe it has now transitioned to i5. So the average sales price is something that we should monitor here. Even if it grows by 2-3% every year, that is a big addition to the bottom line, because their operating expenses are largely fixed in terms of overheads. This is what they are trying to do. Um, so that they have indicated. So 20-25% turnover growth, with volumes increasing by similar amount, and 75 to 100 basis points increase in profitability should lead to a good compounding story. Stock, if you see optically, is expensive. I don't remember exactly, but I think on 40-50 times P. But the longevity is so, in my view, so vast here, and they are one of the, or maybe the only player who is able to do it at scale. So I think the runway is all theirs in this.
Sure. And you had some other ideas as well in mind, right, Vinayji?
Yeah, no. So my I have a very good position in a company called High Green Carbon, which
Yeah.
the end of life tires is something that they recycle into good products. But that has fallen down a lot because a couple of funds have been indiscriminately selling. Uh, the company by itself is in a stronger position than where it was 1 year back, and the stock price is 40%, 50% down, or
Yeah.
wherever. But yeah, again, here also it will look at optically expensive in terms of 40p or wherever it is. But in the longevity of this business is very good.
Yeah. 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 Okay. Thank you so much, Vinayji, for
Vinay bhai,
Yes, sir.
hi Sandra. But why the margins are drastically reduced in the high green carbon?
Yeah. So, sir,
Last year, at the time of IPO, they had given margin around 30%, I believe.
yeah,
Now,
25-30% it was there in
yeah, but
between.
now it has been reduced to half.
Yes. So the reason for this is that till at the time of IPO, they had just one plant in operation, which was a 6 7 year old plant. It had reached maturity phase, and that is the potential that their every plant can generate. Now, till 6 months back, they had just one plant in operation. Now they have two. So they need to incur an expenditure of around 50 crore to set up one plant, including everything: land, building, working capital, capex, everything. So as and when this setting up expenses has pulled down their EBITDA margin, and this is likely to continue for a few more times till they reach a phase where they are large enough. So let's say you're setting up one plant when you already have one plant, then you're setting up another plant when you have two plants, right? Then you're setting up one plant when you have five plants. So the impact of these setting up expenses will proportionately reduce as they grow in size and they have more and more plants in operation. But till that time, I think this is, they call it one off, but this one off will keep coming with every plant setup. So my feeling is that we have to work with a margin of between 15 to 20%, and no, let them do their thing.
Vinay, one question. Any reason for preferring high green over Tina rubber? Given Tina is bigger and it's a very logistic driven business. So if you have your raw material collection points well
Yes.
spread, it helps. So any reason, any preferences why high green over Tina?
Yeah. So Tina and GRP, and I think Shri Chakra or some Mansachala. They're the three listed companies in tire recycling. All of them have different products. There's one more retreading company also. I'm forgetting the name. So what attracted me to High Green specifically was, their the product is, let's say, a sort of fancy term, cradle to cradle, in the sense that the product that Tina or GRP manufactures, it part of it goes into road construction. Right? So road will have a limited life. So after 5 years, when the road crumbles, what do you do with the carbon black or carbon elements that are already embedded in that? So it's a like a cradle to grave. But here, what High Green has done is, using their pyrolysis process, they are manufacturing oil, which is a substitute for furnace oil, and they are generating recovered carbon black, which is a substitute for virgin carbon black, which goes into all rubber products. So their products, and they have zero liquid discharge, zero solid discharge. Their gas discharge is at ambient temperature, meets US standards. So when I heard them in Alpha Ideas 2 years back, I thought that they are a little better company in terms of their products compared to the existing players that were already listed. And the validation of that is that both of these, Tinna and GRP, have announced plans to get into pyrolysis,
Pyrolysis, yeah.
because GRP 2 3 quarters back gave out some industry data also, where they feel that more than their crumb rubber business, what they make, I'm forgetting that term, they see a bigger market potential and a faster growth rate in recovered carbon black, and therefore they are getting into that. So that is kind of a validation when a large peer wants to diversify into a completely different product from its own base into something that High Green is doing. So market is very big, and this will actually lead to greater adoption of these products.
Thanks.
Thanks, Vinay. I think Dhruv has joined us, and Dhruv, you have a hard stop right in some time. So, would you like to go next? I mean, we can help you, kind of get started.
Yeah, yeah. So,
Sure.
I've discussed a few ideas even last time, Southwest Nation and things like that. This fortnight, I was researching on NBCC and NRB Bearings. NBCC has a good pipeline of projects which are coming on stream, and for them, the land bank in Delhi, which was mainly stuck due to regulatory issues at the state level, they will more or less start getting resolved because of the government change. So that remains the big growth driver. And even otherwise, their key metric, which is the revenue per employee, has been inching up. So both
So
of
I would like to interrupt. Your voice is not clear.
yeah,
Is
is it better now?
come closer to your
Yeah,
I think mic,
just
then
a
it will be
second.
okay.
Is it better now or it's still
Yeah,
not good?
yeah. It's better. It's better. We can hear
Yeah.
you.
So so on NBCC, that was the key trigger which I've been tracking. And if you just go and track the DDA announcements, of redevelopment of the entire old Delhi, there will be big, large orders which will flow through for NBCC from there. So that is one thing I was studying, for the past fortnight.
Okay. Dhruv, thank you so much for pitching in here. We would need, some of the members had personally requested that if you can maybe highlight a little bit on Southwest Pinnacle, like a
Yeah.
very
So
brief theory. Yeah.
So Southwest, last time also I mentioned they are in the entire value chain of the mining space. What they have done is they have four services on mining, one or two on oil and gas, and there is a little bit on the aquaculture thing, aquafire thing, which is mainly groundwater treatment and groundwater surveys and things like that. So that is how their service portfolio looks like. They had planned this diversified service portfolio because they all are very cyclical industries, and they didn't want exposure to one particular sector at any point of time. And a lot of these sectors are policy driven, government driven. For them, the big driver is that all of those services for a change are working together for them. Mining has really picked up, and like the four services of mining, which is seismic surveys, exploration, anything you tell them, are doing very well. So that is one part of the business. The second part of the business is they are into coal-based methane production. They have already got two rigs deployed for Reliance, from which they have a regular cash flow, and they are doing the on-ground operations for that Reliance. So the entire field is outsourced to them. So they're giving the kind of for Reliance for the past 10 odd years. This should continue going forward, and now based upon that particular what I would say win, you will have more orders flowing in from Coal India or such other companies, specifically Vedanta to be precise. That is the second thing. The third figure which I just shared on the group is they have a coal mining block which got auctioned to them in during COVID in 2020, for which they have received the approval now. Once this project goes on stream, it will add close to 400 to 500 crores of revenue, and because this is a mining project, it can end up adding 200 crores of PAT to the bottom line. So that's the big thesis of Southwest going forward. And this year also, they should be able to show good YOY growth for their service business. Any
So,
questions on the services or anything? I'm happy to answer.
no, just one question. So, this recent, I mean, Southwest has, since the last time you spoke, it's already gone up like 40%. So,
Yeah, yeah.
was this the reason that they were expecting this
No,
announcement to
so
come? Yeah.
this was really not really known by the market, or explored, or discounted by the market. It was mainly because after a very long time they were able to show good growth, and now it has come in the traction of visibility of people have started tracking the stock, I would say.
Hmm.
Till now, no one was really looking into it. So that's the
Okay.
big change that has now happened. So that is why people are now looking at. He did his first con call just this quarter, so that is why.
So,
So, Dhruv, I think this coal is just like an optionality. I think there is so much more in that other business, especially the groundwater surveys that these guys are doing,
Yes,
right?
but those
Across.
are, yeah, so those are typical growth drivers, like I would say 20-25% revenue growth drivers, as in when they win the projects and things like that. The big optionality remains core because that can really give a very big bumper and take the company to a new orbit altogether. So that's the thing. But I'm not betting just on that. So my bet was mainly on the services growth. I was
Correct.
treating coal as an
Correct.
optionality. I still treat coal as an optionality, but it is a very big optionality, which is now coming very closer to on ground execution in that sense. Because till now there was no too much movement. You had to wait for the approvals and things like that. But 6 to 9 months they will start work on ground for this project.
Perfect. Thanks so much, Dhruv, for joining in. Really appreciate you giving your time. Can I request Vinay Chaudhary to maybe go in next?
Hello, am I audible?
Yeah, you are audible.
Yeah. So since last month, I mean, most of it was the on the unlisted space, but on the listed space, what we are having a strong conviction is SEM India Projects. That's an EPC company which specializes in marine projects. So the story is basically Adani has taken over this company, and from a Thai-based promoter, and it's currently owns about 67.5%. So in the last say 2 3 years, the inflows of the company was ranging between 7 to 8,000, which is now expected to bump up to 15 or maybe more than that. We are expecting 20,000 because of the Adani internal group, projects. So they had already executed few projects of Adani which were quite large for them, about 4 5,000 crores. So they have some relation of with Adani, and they are taking it ahead. So from 7 to 8,000 of inflows per year, it will go up to 15 to 20,000 every year, say at least for next 2 3 years. So the revenue from the current level 9,000, it can substantially increase. However, in these kinds of companies, there won't be much of margin expansion because all would be passed on to the any kind of benefit will be passed on while bidding. So and one thing to be noticed here is that working capital for any of the projects which will be won from Adani, the company doesn't need to give any kind of non-fund limit or any BG limit to to this. So there won't be any blockages of non-fund limits. So they can avail this open limits for the outside of the group inflows. So that will kind of help them to achieve that kind of inflows every year. The other thing on the working capital is that in all of the infra companies, SEM India is one which gets mobilization advance only. So mobilization advance is something which client gives to the company to kickstart the project. So that can be either interest bearing or non-interest bearing. So the company has an advantage that only say 20 to 25% of the advances are charged as an interest to the company, and rest is kind of free of cost. So instead of taking debt, they can avail mobilization advance. So and the pipeline is quite strong given the fact that they have been winning orders, say about 1,000 to 2,000 each project. That is expected to also increase. Like each single project can go up to 4 to 5,000 in terms of qualification. So yeah, this is the broad thesis. Of course, the as an industrial risk is there, the execution risk will be, there. There can be any slow moving projects. There can be stuck receivables. However, having said that, if we see the historical trajectory during the COVID times also, this was one of the companies which neither defaulted, neither asked for any moratorium period. So they actually serviced their debt quite on time. So they didn't have any kind of debt issues in the past. So yeah.
Semindia is primarily ITD only, right?
Correct, correct. So
Yeah, okay.
post the takeover, they recently changed the name.
Okay, okay, makes sense. ठीक है. Thanks so much, Vinay. Varun, if you are able to hear us and if you are back, would you like to continue or should we just move on to some other names? If Varun doesn't reply in a minute, we'll go to Viram. Viram, are you ready? Would you like to maybe speak if you are able to hear us?
Hi, I won't be able to share any idea today.
Okay, no worries, Viram. Yeah, thank you so much. Then who else should we go to? Okay, Vaibhav ji, over to you if you are there with us.
Hi, sorry.
Yeah,
Hello.
Varun. Yeah, Varun, we can hear
Yeah,
you. You can.
I Shobit, Shobit Lifestyle was able to share now since I'm battling, and I wasn't exactly aware we have to share. So I wasn't.
No, we are
Are you
not
able
able.
to hear clearly?
No, no, I'm not able to hear Varun. Varun, are you able to hear us? Because we are not able to hear you.
I hear a lot of disturbance. I'm not able to hear anyone.
Okay, so you would like to maybe we'll okay, we'll park you. We'll go next. I mean, we'll kind of you
Yeah,
can.
I'll just drop a message.
Okay, you can drop a message. That's fine. That's not a problem. Then Viram, would you like to go next? Okay, Viram, you said you don't have any idea for now. Okay, that's fine. Tanay, you are next online. Do you have anything that you would like to share?
Okay, guys, so my idea is MB Engineering. I am sure many of the guys are anyways tracking this. So basically, this company is into Proflex, your roofing and your PEP side, pre-engineered building, and the sector is very hot. Your companies like Interact, MB, Penna, EPEC, all are doing great in terms of growth, and I expect this sector to grow at least 30-35% for another 2 years. So particularly with MB Engineering, it's said among in the entire industry, this company has the best ROE of 30% there, and in terms of growth also they are doing very good. I expect the current PAT, which is about 7,800 odd crores. This next 2 years, the company, in next 2 to 3 years, company's PAT, they can do somewhere between 140 to 150 crores, and market cap is about 2,500 crores. So they have came up with a good set of number this quarter. Of course, there was a one-time hit on the expenses side because unlike other players, they do have a exposure. They do have a export, exposure as well, almost about 160 odd crores there. And because of the tariffs and all, they took a hit on their books, because of which EBITDA may look subdued on this quarter. But adjusting that one-time effect, the EBITDA is also grown, and the margin somewhere should remain in this range. So there won't be any margin expansion, but it's a pure growth play. And as long as India capex cycle is picking up, these kind of companies should do very good. So it's reasonably valued in my sense there, and almost 17, 18 times on FY27 is what it is trading at. So I think it can be a doubler in next 2 to 3 year period.
No, thank you so much, Tanay. I remember you've been telling about this company since a long time. Any comment on the results, Tanay? I mean, have you tracked its result already for this quarter? Was it online, or do you have any other comments there?
Yes, yes. So the order books remains very strong. So almost 1,000 crores of order book is there. There out of which thousand almost 750 odd crores is there on the PEP side. So they are not facing any challenges. In fact, management has made given a good guidance. Let's say second half they they can deliver a positive surprise on the growth. So most of the sales they are expecting in the second half of this year. So they are very bullish on the terms of growth. So there is no challenge as such. Plus their new capacity, they have a chair plant, so their new capacity is at 40-45%, which in this second half of this year can go up to 55-60%. तो कैपेसिटी यूटिलाइजेशन भी बढ़ेगा इसके अंदर, और H2 में बहुत सारा ग्रोथ अभी और प्ले होगा. एंड बट यार उसमें बस ओनली चीज यही है सुमित भाई, मार्जिन एक्सपेंशन इतना ज़्यादा नहीं होना चाहिए. एंड अमंग द एंटायर इंडस्ट्री प्ले मार्जिन्स इससे बेटर किसी का है भी नहीं, बिकॉज मेनली ये फॉरेक्स एक्सपोर्ट्स बुक इनका अच्छा है कंपेयर टू अदर अदर प्लेयर्स.
Okay. Okay. Thanks so much. Thanks. I think some of you have texted that they have some other things, so they need to drop off. But maybe if you
Hi.
would like to, yeah,
Yeah,
if you would
sure.
like to, sorry, just one second.
Yeah,
But if
sorry.
you would like to, speak without your turn, just raise your hand and we'll allow you to, kind of go ahead. Yeah, but go ahead. Sorry, there was somebody who wanted to talk.
Yeah, hi, Varun here. Am I audible now?
You are absolutely audible, Varun.
Yeah, sorry. Since I'm traveling and I'm slightly new to the forum, I won't be able to share anything right now. But I'll surely get back in the next one if that's okay.
That's okay. Yeah, that's okay, Varun. Go ahead.
Thanks.
Saurabh, bhai, if you are there and if you would like to maybe speak now, that's okay, or we'll move on. Okay, I think Saurabh bhai will join in again. He said, okay. In the meanwhile, would Vaibhav ji, you would like to go next, please?
Mm, yeah, I'll keep it. Hello, can you hear me?
Yeah, we can hear you, Vaibhav.
Hello.
Yeah, we can hear you.
Yeah, so one of the companies I made a plant visit this month was called company called Safe Enterprises. Someone, I think Harsh had mentioned this on group as well. So I found that company very interesting because I think it's a proxy to the retail sector capex boom in India, and I think they are very sector agnostic, and they basically make retail fixtures, and they have a lot of IPs developed over the last few years where they make modules, uh, and basically that is all electrically done, and they have IP for that. So many of the competitors do not have that IP, and what they are able to do is get orders from a lot of retail companies like a Trent or Trent. They have West Side Studio kind of a format where they can just put the retail designing and everything, and they manufacture at their plant, and thus they do the installation at their retail stores. So I think that model is very good, and they have a lot of good customers, be it from retail companies like Aditya Birla, Trend, Studio, or even in companies with in the footwear space, in the jewelry space. So they are pretty agnostic to which company is doing well or which sector is doing well in the retail space. And they have a, I think, a very good promoter. I think I met the promoter and I was very fascinated by him because despite his disabilities, he has some vision problem, but still I think he has a good knack of growing this business, and they have been in this business for 35 years, and their business has been doing very well. I think they did a turnover of 140 crores last year, and after the company did an IPO, they used the funds for capex expansion rather than OFS. And over the next few years, I think that the company is on track to grow at a very high pace. And the recent facility that they have as a capacity to support peak sales of around 1000 crores. So right now they did 138 crores last year, and this half year they have done around 110 plus crore of sales. So I think that growth is very high over a period, and they can execute. If they can execute well, the margins are also very good in this business because they cater to specific industries, good clients, and they are also looking for exports in the next 2-3 years. They are looking at good exports from Middle East and Europe, and all those places they are working on that. So I think if this company can execute, this can be a very good proxy play to someone who is bullish on the retail space. So I was studying about that, and I thought that maybe I can talk about this, and if someone has any insight or someone wants to uh, put some views across this, I would be more happy to listen to them. Thank you.
Hello.
Uh,
Hello.
Hi. Can you elaborate on that electrical IP that you mentioned? And
Yeah.
second
So
point is that there were some discussions in some other groups about how they are able to generate such high margins. So, any thoughts
yeah.
around that?
So the margins are high because I think that they are catering to the one of the some of the best clients, and since they are in those segments where the clients are more bothered about the execution rather than
हाँ वो बोल दो
margin.
ये 18 गई है आपकी
Hello,
no, no, no.
18
Sorry.
17 ही होगी
I think
hello.
can you
ठीक है
continue? Continue. Continue. I think
मतलब
somebody is talking while on mute, while unmuted. So
Yeah,
that's
ठीक
so
है
okay.
so
Continue.
thing is that since they
ठीक
are
है
catering to these top clients, they are able to charge a higher price because the clients are more focused about their execution and designing and all those capabilities that this company brings to the table. So that is why this company has been able to generate higher margins. Obviously, the I think the margins will moderate a bit from here. I think these 35% would not be sustainable, but I think that over a 2 3 year period, I think even if they generate 25 to 30% on a sustainable basis, I think the levers for sales to grow is pretty high. So that would ensure that the profitability growth is also there. But they have benefited over the last 3 4 years, I think, because of the raw material deflation also, and because they cater to some of the best clients, they are able to maintain that margin because the clients are more focused towards execution and designing and all those things that the company has in store. So that is why they are able to command these margins.
Okay, thank you. And that electrical IP part?
So the electrical IP, the company displayed all the products, and basically in the modules that they have. So suppose they have a carpenter who is doing all the module stuff, and within that module, all the electrical cables are inserted, and what that helps is that within a particular line, all the electricity is supplied, and they can just open the retail if I think if you go to their to YouTube and search about this company, you will get a list a particular video about how they are doing this, and they will explain the products also. So this is very flexible in terms of if someone has a retail outlet, they can use this product and they can change their design and everything without having to do change the complete fixtures part of the thing. So I think that this specific thing has been developed by them. So they have done a lot of R&D on this, and I think that is benefiting them. Other players have not been able to do that till now. So that is the IP is basically related to how they have manufactured the product.
Okay.
Wonderful. Thank you. I'll check that video out.
Yeah,
Yeah,
but thanks so much. Weber, we'll just park you for a second because I think we have Saurabh who has joined in and he has
yeah,
a hard stop in 5 minutes. But we also wanted
sure,
to
sure.
talk to you, Weber, around you met Ashapura Mine Camp, right? So we just
No,
wanted
no,
like,
I didn't
oh, you
met
did not.
them.
Yeah.
Actually, I wasn't able to go to that
Okay,
meeting.
okay, fine. Okay, that's fine. Okay,
What's the
that's
name
fine.
of the company, Shobit? Weber? What is the name of the company?
Safe Enterprise, sir. Safe, which
Safe
Weber
enterprise.
presented right now. Safe
Okay.
Enterprise. Yeah, Saurabh, bhai, would you like to go next? Considering that you have a hard stop and you would like to leave.
Yeah, sure, sure. Thanks, Vaibhav, for the consideration. So, two companies I have studied recently. First one is it's a compounding story, looks like. So, the company is Gufic Biosciences. This is into pharma, healthcare. It's a more a domestic criticare segment story. What I liked first, I will tell you, I've been tracking this company for almost 4 years, and I think post COVID, when there was a lot of revenue built because of COVID, what I liked, the manement was honest enough to highlight that X percentage of revenue is not going to come. So that kind of transparency was there. Also, it is a next gen promoter, Pranav Choksi. His background in terms of comes from John Hopkins University, which is one of the world's most renowned universities when it comes to healthcare and all. Also, the way they have built small businesses. Some of the businesses are small, but I think that should play. So they are mainly into criticare, the criticare division of any hospital. If you go domestic, they will have their products around injectables and all. But slowly they have built small business units in very interesting areas. So like, fertility is a big issue right now. You have all this IVF and all. So they have products around that in women healthcare. Then this whole cosmetic surgeries, where the whole Botoxin and all, that kind of facial surgeries and all, that is another business. These are all small businesses. But they are building it, they are scaling it, these businesses are growing at good rate. Now, immediate trigger, what is the immediate trigger? So recently they have finished almost a 400-450 crore capex, and this capex is capable of doubling the revenue. So before this capex they were at around 800 crore sales, and this capex will give them another 800 crore sales, which should come in next 3.5 4 years, depending on how fast they're able to sell it. And 1 quarter back, the capex went live. First quarter when it went live, it had around 20% kind of utilization. Right now I think they're somewhere around 25-30% utilization. So maybe I think 2 quarters down the line, my sense is from FY27 Q1, it will start hitting the utilization where you'll see a break even on the capacity, and then the plant, the whole operating leverage should play out. So if you remove the impact of all the front end expenses which have happened in setting up this facility, the company used to operate around 18% kind of margin. And this is more advanced facility. So this facility should be, in one of the con calls they have told, this facility should be much better in terms of cost effectiveness and all. So right now, because of all of this, negative operating leverage, because of lower utilization, front end expenses, the margins were down to almost 13-14%. And Q2 results, we can see slowly margins inching up and going to 15%. My sense is every quarter this margin will go up, and in 3 to 4 quarters we should get back to 18% kind of margin. And maybe if everything goes fine, because they also plan to go for a European audit. If they are able to manage all of that, the margins can further increase. So in summary, the medium term story is doubling of revenue in 3.5 to 4 years with a margin expansion. And in long term, you have all the other elements in terms of women care, fertility care, Botoxin, and all of that. So that is one. And the second idea was also in healthcare, which is a SME company, Influx, Health Tech. I have just put a link yesterday or day before yesterday. The whole blog is there. I'll just tell in 2 lines. It's basically a contract manufacturing story in the wellness space, catering to nutraceutical and all these protein and gummies, and pet care, which is a very emerging area. The company is growing at 30, 35, 40%. I think this year they have a target of crossing 150 crore, and 3-4 years they have a target of crossing 400 crore of revenue. They work on 20% margin. I have been little skeptic about the margins, but I looked through some of the big four reports where they have covered a lot of unlisted companies, and at a 500 crore scale everybody works on these kind of margins. Maybe once they reach 1000 crore kind of revenue, then margins will come down, because big players, when they give you volumes, they cut down the margins. But I think it's a good 3-4 year high growth story if one wants to look into wellness, FMCG, lifestyle, that kind of segment. So yeah, these are the two things I had to share.
No, thank you so much, Saurabh bhai, for your time, and we'll go to the next person. Tanay, you have done. Samyak, would you like to try if you can speak now? No, I don't think we are hearing you, Samyak. I think there's some issue in your mic, so maybe we'll park it. Punit, would you like to go next? Punit Thakkar, we aren't able to hear you. If you
I am into sometime completing something. Give me 15-20 minutes. I'll join the queue.
sure, okay. Jagan next. Sorry, Jagan, you wanted to kind of come in.
Yeah, sure. So last week I had a chance to go through this in detail about this IMFA, Indian Metals and Ferroalloys Limited. I think in the group we discussed about this earlier. Um, so I was going through their results report, their con calls, etc. So basically, they are a ferro alloys in manufacturer. They are integrated. They have their own chrome or mines, and then so they have their smelters. They also have their own power plant. So from that perspective, in terms of chrome ores, the power required for the production, everything they have in house, and that makes them a unique manufacturer in this space. Um, Another element that is happening globally.
No, go ahead, Jagan.
Yeah, yeah. Another element which is happening globally is regarding the South Africa power crisis and the reduction in the ferrochrome production over there. So what I understand, the South Africa ferrochrome production has gone down by almost 50%, and there are players who are thinking to shut down their plant even further because of the power crisis. And so to that extent, the chrome or exports, the raw material for this, so that is being that is getting increased over there. But the South African government is going to put a restriction on this. The second order effect for this is that China, which is the other major player, they rely on chrome ore from South Africa only. So the way this is playing, I believe that so there is an export restriction on the raw material from South Africa, and they are not able to manufacture because of the power crisis. On the other hand, if because of this raw material export restriction, China may also have may face certain challenges on procuring the raw material. So from that perspective, the sales of sale price of this ferrochrome would be on a higher side. So the management believes that it should be around 110,000 per ton. So I think last year the spot price, I mean last month the spot price was around 100,000 per ton. Now, so from that perspective, it could go up to 110, 120, and it may get to this level, stay at this level for a foreseeable future of 1 to 2 years. And coming back to Infa, their cost of production in terms of EBITDA cost is around 78,000, 80,000 per ton. So which means at an EBITDA level, they can make around 30,000 per ton. And the management expects that because of their acquisition of Tata and then their greenfield expansion, they can go up to 400,000 metric ton next year, FY27. So which means so at a 400,000 metric ton with a 30,000 the EBITDA, so they might be clocking around 1200 CR of EBITDA.
Yes.
So which will put them in a very good valuation from that perspective. So in one and a half year, I see that the stock could be a 2x 3x from here from the current level.
Yeah, so Jagan, for IMFA, you had some questions on the working. We
Yeah,
are arranging a call with the IMFA management team in the first week of December. So
sure,
we'll have you join it, and there are some other funds who also want to join in. So it's
sure.
going to be a very limited participation call for around 4 to 5 people. I will make sure that we include you in that meeting whenever it happens. Yeah.
Surely, surely.
So
So
yeah.
I had one question on the production, because in the last con call they said that they will so reach 400,000. Whether so that is something so really doable. Is there any execution challenge over there? Because so if that's not going to happen, probably there could be challenges in terms of achieving this EBITDA level which I spoke.
Okay, fine. Sounds
And
good.
any update on their their diversification part, in their ethanol business? Any idea?
So see, in the con call also they were silent. This is, I would think that this is quite a smaller bet. Even so strategically, it is not very clear why they have entered in that space in the first place. The only answer from them is that they, I think they have a plant in Tarubali wherein they have space and then capacity to offtake etc. logistically. So from that perspective, they've said that so they've acquired this plant. But if you see their con call throughout, they are more focused on the ferrochrome. I don't see that they will
Correct.
expand that further.
Thanks.
Yeah.
Thank you. Thanks so much, Jagan. Thanks. Nilang, would you like to go next, and then we will have Harsh going in. Uh, Nilang, we are unable to hear you. If you're talking, is it with me or is it with everyone else as well?
Even we can't hear.
Okay, Nilang, we can't hear you. Maybe if you can, kind of drop off and join in again. In the meanwhile, maybe Harsh, if you would like to go.
Yeah. So the idea which I like is the microfinance sector and specifically Fusion and Arman Financials. So the
Hello, it's
Yeah, yeah,
audible now.
yeah. We can hear you. Okay,
Okay,
Harsh, would you
sorry,
like
I
to
just
pause
moved.
and
yeah, that's
Same.
fine.
yeah, Nilang, you can go ahead. Sorry.
Yeah. So just one idea from my end. I think so. Studs. The helmet manufacturer that looks interesting from a valuation perspective. So right now I have a lot of ideas in my tracking list, but the market has been extremely volatile. Somebody is having a very good visibility is also correcting irrationally. So I just felt if one was to allocate fresh capital and then just see an immediate 10-20% MTM. So one should build positions slowly in the current market going by how things are. So unless there is immediate uptick in numbers and the valuations are dirt cheap, one can go ahead and build the position. So studs is something that I already had a position. I have built some positions also because it is fitting into that criteria. Automobile helmet manufacturer, a very old company, always been debt free. They do their capex, they take some small long term debt, and then in the next year that debt becomes zero. So currently also the IPO was the OFS because the company doesn't need money and it's generating a lot of cash already on their balance sheet. So there are two three triggers also right now. H1 they have done about 40 crore pat. I think so. H2 they can easily do 55, 50, 55. So even if you consider 9500 crore pat for the full year, I think so. Now currently it's trading at 2100 crore valuations market cap. So it's available hardly at 20-21 times, and there can be a simple 15-20% growth here. Margins are today 20%. I think so. It can easily go up to 22-23. There are raw material prices. So two three triggers is one of the raw material prices have crashed this time. ABS is the key raw material. It's an engineering polymer. So the BIS, which was applicable on it, has been removed. So there has been a lot of imports of ABS. So it's crashed as much as 18-20% in this current quarter. So that can hopefully see some uptick. Plus, there is a festive season is supposed to be good now. The GST is reduced, so that will also aid to this uptick. So it is kind of a proxy to two-wheeler sales also. So two-wheeler sales should be very good this quarter. And another regulatory tailwind is from 1st January, most likely there will be a regulation where the rider will also need a helmet. And this will be very, so it is already there in few of the regions, but this will be very strongly implemented. And from the OEM side, when you buy a two-wheeler, you have to give away one helmet as well. So from 1st January, it will be possible that there will be there'll be two helmets that would have to be sold along with the two with every two-wheeler sale. So that will, I think so, immediately increase the market size, demand offtake by at least 30-40% in a near term. So I think so next 2-3 quarters can be very interesting for this company, and the valuation is also kind of comfortable for one has to take a bet because there's not much of a disruption risk. Your valuation is conducive. It's a cash cow kind of a business. It's a very simple product. It's a three-player market in India. He's the largest. Second and third is like Vega and Steelbird. Both of them put together, he's larger than both of them, the second and the third put together. But there's Vega is also coming up very well. He is becoming a good competition for Studs. Studs is not very good on the online side. Vega is good on online. But Studs post IPO has told now will start building out the online channel as well. Also, another very small option value here, if it picks up in the future, we don't know. So they have about a 50-member R&D team, which was very shocking for me also. Okay, in a helmet company, why do you need an permanent R&D team of this size? So it seems like they've been working on a smart helmet, So a lot of, like, you see those smart glasses. So there can be a smart helmet with these AI features, and something what you see in an Iron Man. So that can be the future for helmets, and that can help with safety as well with GPS. Like the audio is very common now. There is already some helmets offering that feature, the Bluetooth audio, but there will be some vision enhancements as well in the future. So if they come up with a smart helmet, which I'm sure they will in the next some time, and if that takes off well, so every traditional helmet can get replaced with a smart helmet at some point. So that can be a huge re-rating, today available at 20 times. And if something of this kicks in, I think so this can easily be a 40 time. It can become an FMCG stock, like, 40 times, because it's a brand, it's a consumable. You will want to have two, three helmets eventually, like with different colors and all. So that is one small option value also this is offering. So in this volatile market, the stock has not really performed on listing. So I don't see that it has a lot of room to go down. But once the stock has settled, I think so 2-3 quarters it gives good numbers. It can do fine because promoters don't need any money here from the company. They have already done a very large OFS. Company is flushed with cash. So downside looks limited. Then apart from this, there are a lot of IPOs that are coming up. So one can trade these IPOs. I see these new age economy IPOs should do really well in the short term, because the old economy stuff is kind of struggling. So something like Lenskart is something I feel can. I've met them some time back during the roadshow, and I've also met their larger VC investors who I know personally. So I think so this can do in the next 2-3 quarters. It will deliver some fantastic numbers, growth and all. So there is some room to make some money here on this from this price. It's not done well much post listing, but I think so. The numbers that just came in on Friday, I think so. They are clearly guiding. Okay, they can do similar numbers also in the next couple of quarters. This quarter also being the festive season, and there is a GST push as well. So all that put together, Lenskart can be a good trade maybe next couple of quarters. Also, there is Misho that is coming up next month. That will be a large IPO. One should definitely apply, and that sector is offering again the opportunity size is very large. Valuation, one has to try and understand what how these things are getting valued. These are not traditional EV/EBITDA multiples, but largely focused on the future time that it is offering. So Misho, and there is another IPO just launched. I got to know yesterday was Wakefit. Valuations are yet to come in, but I am definitely sure there is going to be a lot of demand for that as well. There has been an exceptional execution for Wakefit also. They've been able to manage costs, able to grow their stores, able to bring in profitably as well. And in the shortest span, they've eaten a very, very large market share from the larger guys like Sheila Foam and Kurlon and all. So that IPO also, I think so one should watch. Of course, these IPOs will be a bit volatile, but given the current market theme, what I'm seeing, I think so. New age, there has been a good appetite for new age IPOs right now. What we've seen with Grow, so this appetite, I think so, will continue on these next 2-3 listings as well. So this one can flip and make some money. Apart from this, IMFA that was just discussed by Jagan. Even I hold some positions here. Their earnings growth looks very much doable. What they have guided, how the capacity is doubling and all. And interesting thing was they are the largest in their market share. They are the largest company in India, and I think so. It was the third largest globally. So that was off. As a small cap, you are able to get a larger player of a segment. It is an interesting thing. Just one thing, even I am trying to build a view on is the multiples. At what multiple can this trade at? Like if one has to just put this in the metals segment, then the multiple today is some 20 times earnings. It is 2022, so which is on the higher side. But I think so one has to closely watch and see if it's able to get a higher establish itself for a slightly higher multiple going forward, because such metal proxies have traditionally been a lower multiple segment. But again, this has had a good balance sheet, very good cash flows, and from the cash it's doing all the expansion, acquisition, and continues to remain debt free. So I felt that is a very good recipe to make money. But of course, the promoter pedigree and the it's not really carrying a very premium in terms of governance in the past from my whatever I could pick up. But given the current balance sheet margin and visibility of the numbers, current multiple should sustain. But yes, I want to see if we can make more money on multiple expansion, which I am not really confident as of now. But yes, if the earnings growth, if they are able to establish two 3 quarters, then and if the acquisition is smooth and able to immediately add to EPS, then I think so there can be an earning multiple growth as well. Apart from this, I was playing uh, the tariff impacted sectors. It's I think so that trade is yet not played out, but I'm hoping in by December end, if something happens on the tariff side, then there can be immediately 20-30% bump up in these sectors. So out of this basket, I have like a Pokarna, which is discussed on the group. So that I feel has an immediate 15-20% upside potential if the anything to do on the tariff side, in that direction. And Garware Films is something that I personally like as a product and as a balance sheet and as a global market time, and their way they have penetrated on the export side. There have been some concerns with the promoter payouts, but I think so that is very well discussed and understood by the market by now. That is a reason I think so the multiples are slightly lower. Otherwise, this can get a slightly higher multiple as well. So if anything were to get solved on the tariff side, even Garware can offer an immediate re-rating. And I'm hoping in the next 2-3 quarters they can figure out something on the promoter payout if they can just kind of restructure it, because there is a very strong investor feedback multiple times given to the company, and what I understand is they are open to doing something there. So if that was to happen, then again this company can be valued a lot higher than where we are today. I think so. That should be enough from my side. If there are any questions and all, anytime one can reach out.
No, no, thanks so much, Nilang bhai. Thank you so much for your participation. Harsh, would you like to go next?
Yeah, so the idea which I like is Fusion and Arman Financial. So the larger theory is that majority of stress has been passed on. We are seeing good improvement on delinquencies, on the early delinquencies, though there are 180 plus numbers are not encouraging, but that is largely because of accounting policies. So what I expect is next year we should see good disbursement growth as we have seen in recent quarter also. So that should improve. These both are available at a decent valuation. So Fusion is available below book, and I think so. The new management is doing a fabulous job. So I believe that the segment remains counter cyclical, and one should play it when the numbers are not very much rosy, and it will improve over the next 1.5 year.
Okay, and anything that you would like to add on Safe, Harsh?
So safe largely I expect them to continue doing this. So new clients will be onboarded, new locations. They I think so have started meeting investors in Dubai. So they're also working over there. They're meeting companies over there. Third,
புதன்கிழமை மாதிரி அப்படின்னா இப்ப நான் தற்கால் நாளைக்கு எடுத்தேன்னா 4 நாளைக்கு இது ட்ரெயின்ல உட்காரலாம். Harsh, you got muted by mistake. Can you unmute
oh,
yourself?
so I'm saying safe Dubai location. They have started working. So I think so that should come up in next maybe next 18 months. And even if we look at Zudio share should come down, but this will be offsetted by newer clients which they'll onboard maybe in the next 6-8 months.
Okay, perfect. Yeah, thank you so much. Go ahead. Sorry. Any questions?
Yeah, hi. I just wanted to check in with Safe Enterprise. I think we've had two pitches till now. In Safe Enterprise, I just want to check what does the competitive landscape look like?
So there are few players who are there, but I think so The competition largely, if we look, is from, we can say that they are not in the segments where there is DMart. They are not there in DMart. Neither they are in your Swiggy and Eternal kind of things. So I think so. Until and unless they do not want to tap a newer market, competition intensity is still low. So they have around 5-6% market share, is what I understand. So the runway for them is also quite better, is what I feel.
Okay, but the switching cost for any client to move to another to a competitor of safe would relatively be less, right?
It's relatively less. I think so. What one should look is, it's not the switching cost. So while talking to few people within Zudio, their thought process is that they get things delivered from safe before time, which helps them in early integration or early starting of their shop, or you can say the branch which they want to. So I think so. The mode largely for safe would be execution. So if someone is able to execute much better than safe at a better cost, I think so people would switch. Switching costs are not high.
Okay, thanks.
Perfect. Thank you so much, here, Harsh.
Thank you.
Puneet, would you like to go next since you
Oh, yes.
requested? Yeah.
Yeah, yeah. Am I audible, Shobit?
Yeah, you're audible. Yeah.
Oh, great, great. So, see, I see a lot of people upbeat on the forging sector, on the metal sector, which is good. Okay, I have been quite upbeat on the sector which is fasteners. Okay, so we recently have been seeing that a lot of CCTV companies got listed. Okay, CCTVs of course have a very good potential. Yeah, and I had been behind this company. This company is called Patel Mech Prequisition. It's an unlisted company. Shobit, can we discuss for unlisted company?
Yeah, yeah,
Is it
absolutely.
okay?
Please,
Okay.
please.
Yeah. So I got a chance to visit this company 1.5 years back, and I was surprised by their facility they have. So to just give you a bit context about it, the entire region of Jamnagar and Rajkot, it is a very big area for brass processing equipments. Okay, a lot of companies are into brass. Almost daily, if you see, around 2,000 tons of raw material is only imported over here. So I was looking for a company which is perhaps exceptional in what they do with good facilities, good management, and someone who has been in operations for at least a decade. I was filtering a lot of companies and finally come up with one company which has got all the companies in house. Okay, and we approached them. They said we don't need funds. They have got already good amount of CCs and all. And then recently, 4 5 months back, when I visited, they had still upgraded their facilities. And what I could see the changes was this the tariff by Trump had impacted a lot of almost 90% of the brass fasteners company. So this fastener is kind of a product which is used in all the industries. What I was looking was for the clientele, and I was surprised to see they are supplying to Selzer, Hikvision, which is a CCTV company, and they're also tying up with some other CCTV companies as well. Automotive they are not supplying, which I was surprised to see, and I'm positive on that as well because I do not want any kind of allocation on auto because of cyclicality. And then what I wanted to understand was their vision for like what next. Okay, apart from all these industries, what could they be eyeing for? Because they had expanded their facility to almost 3x and they still did not have enough uh, personnel on board, machines, and then they expanded in the next 2 3 months to get more raw materials and more machineries. But still, they were underutilized. They could only produce almost 20% of what they were actually having the capability to. So by that, if I quantify, they last year did 30 CR, which is also a very small company with a PAT margin of 20%, around 6 CR. So I was surprised with that. I did my research to see what other companies are doing, and because these guys had everything in house, they were able to get more output from it. And then I wanted to inquire what still they are looking for. Okay, and then they had been in touch with a couple of defense players where supplying all these screws, fasteners, nut bolts. The standard is very tight. Okay, they need to get a lot of approvals, and they have already started for that. So that is what increased my thought process, and whatever I had been thinking of the sector, that strengthened my thought process on it, and I thought of putting some amount in the company. Okay, so that is where my primary bet is in listed players. I am not looking at more entities. uh, so KMEW, Knowledge Marine, I have been an investor since almost 1 year or so, and I'm sure the story is known to almost everyone now. And all the green tech theory, they have been doing into this drilling. They have been supplying to Dredging Corp. They're supplying their services to Dredging Corp since a long time. So Patel Mech and Knowledge Marine are my two top bets as of now. Thank you, Shobit. Any questions? I am open to answering. Specifically, I mean, not much for KMAW, but for faster sector, I'm okay to answering any questions. Yeah.
So if Punit bhai, you can share your unlisted this details on the group, it will be really helpful.
Yeah, yeah.
If you have
I'll
any
post it.
presentation,
I'll post
yeah,
it. I'll
sure.
post it. Yeah, yeah. Sure, sure,
Thank you
sure.
so much. Thank you.
Thank you.
Yeah. So may I request Prateek bhai to go next? Prateek Chaudhary, if you're there on the call.
Am I audible?
Yeah, yeah, you're audible, Prateek.
Yeah. One of the ideas that I recently started studying and researching is Sansera engineering. Uh, what is very interesting is how their ADS division, which is aerospace, defense, and semicon, how this division is scaling up. So currently, this only forms around 5% of overall revenues, and predominantly the other major portion, which is bulk of the company's revenues, is 70% comes from the automotive side. Uh, and then on the non-automotive side, the segment where a very large latent potential is getting built up is the ADS segment, aerospace, defense, and semicon. So first half, they did around 86 crores in the segment, with I think Q2 being around 49 crores. This year, they have guided for roughly 300 to 320 crores top line, which would mean that the second half would be closer to 220 crores, or 220 to 240 crores, and your quarterly run rate would then move from say 45 50 crores that they did in Q2 to more than 100 crores that per quarter that they would do in Q3 and Q4 as far as top line is concerned. Now, this division comes with EBITDA margins of 25 to 30%, and the management on the call, they indicated that their current EBITDA margins are in this segment are in the higher end of this 25-30% range. So as this scales up, from and the company-wide EBITDA margins as of now consolidated are roughly 17%. So and I feel in H2 itself, the contribution from ADS, which was 5% in H1, would move to almost 15-20% in H2. And for FY27, they've already in their recently released presentation, they spoke of. I mean, they guided for doing 500 to 550 crore as top line in this business income, as compared to 300 to 320 crore in FY26. Uh, so there's a decent runway building up for this business, and again, if you listen to the call, they say that they are working with the tier one suppliers in aerospace. They're working with global OEMs. On the semicon side, they said that they're working with some very large semicon equipment manufacturers, I think they're in this case they are mentioning Lam Research, which is one of the biggies in semicon equipment. Um, so in the ADS division, they're again expanding, and even and for the company as a whole, they would now want to very significantly focus on the non-automotive side. So they're putting up another 250 crores investment on the ADS side over the next couple of years. And another very interesting data point that they released in this current presentation was that the cumulative order book on the ADS side is roughly 4,000 crores, which is to be executed over the next 4 or 5 years. So, I mean, just imagine that they'll do 300 to 320 this year, 500 to 550 in FY27, and they have, just with the current order book, they have a backlog of whatever remaining 3,400, 3,500 crores. So the scale up, I think, even beyond FY27 would be very significant. And I think in Q1 call, I guess they did softly, indirectly indicate that we could be looking at 1,000 crore kind of number on top line in 2 3 years under this segment. Other comments from the con call on the ADS side were that this is probably just the start. There are a lot of other developments, part and product developments that are taking place with these OEMs, and they've probably just barely scratched the surface. So I think this can become very interesting. This segment and can change the numbers for. So I think they did roughly 70 crore PAT in Q2. So my sense is that by Q4, this PAT can move to maybe 80, 90, or even 95 crores, because those higher EBITDA margin revenues would kick in, and incrementally these numbers could come in. Uh, so it's at roughly 10,000, 10,500 crore market cap. And when you start seeing quarterly PAT numbers closer to 100 crore, especially when the incremental revenue and the profits are coming from the ADS segment, I think there's scope for a lot of re-rating, as the management will disclose more of their plans on this side. And what was also supportive was that even on the automotive side, they said that they are in discussions with a few European OEMs for some very large RFQs. And on the US side, pending this tariff settlement, they're contemplating putting up a separate facility altogether there, because there's demand and they don't want to, miss that. So overall, I think it's on the automotive side, say staying status quo, and ADS maybe surprising and picking up very significantly and becoming a much major portion of their revenues and profits. I think we could have a good, interesting candidate here for maybe a 30, 40, 50% CAGR over the next 2 3 years.
No, thank you so much, Pratik. I think this is one idea where even I have some notes. I'll share it with you on the group, but it's an interesting idea. Any questions on Sansera, or should we, kind of go to the next question?
Just one more again, and as just as other participants, even I have very recently invested in IMFA and have done some work. There were I think on 27th November or so, there was another very large ferrochrome miner from South Africa which has closed operations. And also this Trump's tweet yesterday, yesterday or day before, which sounded very negative for South Africa. I think it just uh, I mean it's sort of giving indications that what is happening there could be a lot more long term and structural, in terms of the how badly things are shaping up there. So I think it may not just be a short term thing for IMFA. And if they can, sustain EBITDA at 30,000 or 35,000 per ton, even for the next 4 5 quarters, I think we could be in for some very good returns. So if you happen to do that call, I would request if I could be included too. I'll be happy to join.
ठीक है चलो we'll do that, we'll include you, Pratik bhai.
On Sansera, do we need to depend too much on Boeing by any chance, or do you think that's not a big risk?
I won't have clarity on their end customers because I started studying this very recently.
Okay,
So
okay.
I'm yet to get into the end distribution of where is this, whether it is. But in the call they did mention that they're working majorly with the European OEMs, which is Airbus in this case. But I'll definitely work more on this and get back.
Thanks, thanks.
Perfect, thanks so much, Pratik. Minesh bhai, would you like to go next?
Yes. So I've got a little bit of a contrarian idea that I've been studying recently, primarily Balaji Amines. We had all made some money in post-COVID in this account, in this particular script, right? And right now it is punished to an extent that the risk reward is getting a little bit more attractive. See, it's like finally it's a zero debt company with very good cash positions on its balance sheet and a good working capital management. Um, Overall, I feel that uh, what I see is some green shoots emerging. We don't need to go and buy tomorrow, but we have to really track this. That the risk reward is becoming really interesting. Primarily, these triggers associated with uh, they will have this dimethyl ether which is going to be commissioned by I think end of this quarter, and this has got a good dimethyl ether is primarily a green chemicals which should be used to blend in LPG, by the government, and also used in aerosols. So I think there are this is a good place where once they get some approvals for the cylinders, this could start kicking in a little bit more. Also, they recently commissioned this dimethyl carbonate and N-methyl pyrrolidone, which are two chemicals which are used in battery grade and electronic grade DMCs. And I believe that there will be some demand for it in the respective electronic space, maybe early next year. This could also try well. The capex that they are doing in different chemistry in this derivatives of methyl and ethylamine, basically aliphatic amines, is good, which will pave way for next couple of years. They have been doing some 1,400 odd crores, and they are guiding to double to 3,000 crores in next 2.5 years. The current margins are very low at 16 18%, and they believe that don't look at the COVID margins, but 20 22% margins are quite sustainable as per them. So if they're able to get to those levels, we should see some good upside in the next couple of years, right? Again, need to track. This quarter again was not so good, but whatever the commentary, and Balaji Amines is one of our customers in terms of what they're talking to us in engineering side. So when we try to find out from them, some green shoots are emerging. I believe that the government is also planning to do some anti-dumping duty in one of their aliphatic amines. So if that happens, that also could help them quite a bit. So this is what I'm studying. I believe that will be good addition, but keep on watching it in the closed radar, right? And see how things turn up in the next quarter or two, because it's dirt cheap right now for a zero debt company with good cash position. So that's
Thanks.
from my end.
Thanks so much, Minesh bhai, for sharing this. We have Nirav bhai, would you like to speak now, or
I just had one question
Pratik, please go
for
ahead.
Balaji Mines. Hello.
Yes, yes.
Go ahead, go ahead.
Yeah, so we do know which aliphatic amine is the government planning to put anti-dumping duty on? Any idea of the name?
I think there's on EDA, like no, ethyl diamine. So this is what I was reading about, like no. So we
Okay,
should be
fine.
able to by end of December see uh, some some news around that, like. No?
Okay, thank you, sir.
Thank you so much. If Nirav, you're there, if you're not with us,
Yeah, I'm here.
go ahead.
Since I'm a trader, some of the best few trades in my life have been the gold and base metal rallies that have happened this year. So I'm very bullish on the metal and mining sector per se. Some companies that I'm investing in are like Sarda Energy, Godavari Power Ispat, uh, and I'm also looking into buying minor ETFs abroad. So gold minor ETFs, copper minor ETFs, those kind of things abroad.
Any what is your thesis now on gold, Nirav? Because you track charts all the time. Let's
So
have a
it
discussion.
has basically run up a lot, but we are seeing fresh breakouts right now. So you can't say. And on a macro view, for the next 3 4 years, I mean, there is a gold put, you can say, by the central bankers. So until there is some stability in the dollar, we don't see. I mean, gold should remain high. How high it can go, nobody knows.
Okay, okay. And would you be willing to just put on the group on what ETFs are you investing for miners? Like what kind of ETFs?
Yeah, so basically, ETFs, I'll put the list on there.
Please.
But I'm also doing basically UCITS, which are basically ETFs based in Luxembourg or Ireland. So those bypass the this tax. Which tax? There's the US estate tax, which is applicable for anything above $60,000.
Inheritance tax.
Yeah, inheritance tax. So for non-domiciled US citizens, like it's $60,000, which is a quite a small amount.
Okay.
So it's better to buy UCITS from based in similar. It's dollar denominated UCITS you can get Ireland based. I'll put a list in the group.
Sure, sure. Thanks so much, Nirav. Thanks.
Yeah, thanks.
Jugal, would you like to go next, please?
Nirav, are you studying Jaiswal also?
No, no. So I rarely study small cap companies.
Understand. No worries.
Yeah.
Perfect. Perfect. Jugal, if you are with us, would you like to go next? Okay, maybe Bharat Bhai. Bharat Bhai or Jugal,
No,
anyone
Shobit,
would.
not much, but I actually I I was busy attending few functions, so could not. But I assumed I discussed the idea Sashi Room last time. Probably I don't remember if that was the one, but I have been tracking that company and it gave fantastic results despite capacity constraints, and the con call was also very positive. So they are coming up with almost a 3x kind of expansion, and the management has been very, very, I'll say, confident of a huge scale up there. So uh, up till now, the record has been they have been able to, I'll say, deliver much more than what they have committed. And if that continues, it's a good play in the aromatic chemicals space, right? Because of few players and not many players doing very well. So that is one idea. Probably it's a SME space idea, but I assume that reasonably priced, but it has run up a bit after the this result. It has run up by almost 60-70%. So can be seen at small, say, if it corrects a bit, then can be looked into, because I assume that coming years with 3x capacity, right, and ability to manage margins can be very, very good for them.
Thank you so much, Bharat Bhai. Thank you. I think we would go with maybe Amita Bhai. Would you like to go next? And then Anurag and then Akshay. I think this should be it. Amita Bhai, you're there? Amitabh, are you there? Okay. Akshay, Anurag, any one of you there on the call?
Hello.
Yeah, Anurag, go ahead.
Hello. Yeah. Thanks for the opportunity. Basically, I have the contrary view because in the last 1 year, market has not performed. Index is performing. Large cap index is performing, but the small and mid cap are not performing, and the your SME index is beaten out brutally. Very. I think the same will continue because the now sentiments is overtaken the fundamentals. Hello.
Yeah, we are
Hello.
with you, Anurag. Go
Yeah.
ahead.
Sentiment is overtaken the fundamentals, so it will not reverse so easily. It will take some time. So I think around after 3 to 4 months or around 6 months, it will take to recover from the very bad sentiments we are having right now. So individual story will play, but still in the portfolio side it will not perform. So I what I prefer is that from here also from around 6 months, still we have to think to save our money, not to make our money. What I believe. So
Okay.
I believe is that silver and gold will continue to do well.
Okay.
Yeah, silver and gold will continue to do well. I have also invested overseas stocks like ABM micro, AMD micro devices, and these things will continue to do well. That's what I feel
Okay.
because sentiments are so down. Retailers are not coming and putting money in the stocks. So in the SME, it's very difficult to get money.
Oh,
This is the main problem because the SME promoters which showed the margin at the time of IPO say around 20%. After one or two results they are reduced it to 10%. There's so many I can list a number of companies. So retailers are now understanding, and the big fund houses or the institutions are exiting from after their uh, this grace period. So
okay.
I think this is the time to save money, not to make money.
Okay. And
That's all from my side.
and what is the, from your side, since you are into, I mean, in the AIF PMS business from a long time, what are your, kind of top AIF PMS specs from your side, maybe, Udarji?
What?
AMS, PMS, AIF and PMSs में, which one
Yeah.
that you like the most? Like, because you have good experience there, right, sir? So what is your preferred AIF PMS at this point in time in this market?
Right now, see, from last around 3 to 4 months, I am selling debt PMSs
Hmm.
and this private credit funds I am doing,
Okay.
not the equity part,
Okay.
because at least I want my clients to save their money from debt AIFs also are there.
Hmm.
That I am doing to save 1 year horizon at least to not to lose money.
Okay. Makes sense.
That's my view.
No, no. Thank you so much, Padaji, for your this. Akshay bhai, would you like to go next?
Hello. Yeah. There could be some noise because I'm traveling. So I would like to tell you about the company 3B Black Bio. So the company is basically into diagnostic space. They do they make diagnostic kits for the disease like chikungunya, dengue, TB, something like this. And now they have also entered into molecular diagnostic space, which is like for cancer, for some uh, some very serious chronic disease. So they have entered into this space. So currently the company is making revenue of around 100 crores and making the EBITDA margin of around 50%. 250 CR is there. EBITDA as of today, TDM. The company is saying we can do EBITDA growth of 15% to 20% in next 2-3 years on a CAGR basis. So this is about their organic growth. Secondly, they have recently done an acquisition of Coris. Coris is a Europe-based company, and the company they have done the acquisition in last quarter. The company is currently into losses, but the company is saying that this company can do revenue of around 8 million in 2-3 years, and with a EBITDA margin of around 10 to 15%. So this can give again 8 to 9 CR of the profit of the EBITDA. So 15% is coming from the organic, 2-3% CAGR will come from this Coris acquisition. thirdly, if the major thing is the company has a cash of around 230 or 220 CR on a market cap of around 1000 CR. So these 230 CR, the company is looking for more acquisitions. Let's say if company is able to do one, at least one sizable acquisition in next 2 3 years, that would add to that would be like a cherry on the cake. Um so without that, they will do the growth of around 18 to 20%, and if they able to do the uh, one acquisition, they can grow by more than 25% CAGR. So this is about the company, and again, the for this expansion, the company don't need much capex. Company saying we can do, we just need to do 1 to 2 CR of capex, and we can grow our revenue by 50%. So, and management is sounding like very confident, and also they are very conservative. This is about my, like, I think Kumar Saurabh is also tracking this company, but he's not on the call. But if someone else is tracking the company, they can share their views.
Yeah, yeah, I
And
mean,
on the valuation wise, the company is trading at around 20 times trailing PE. It is ROC of more than 20%, ROA is more than 20%. Looks
Akshay,
decent at the current.
if I may ask on 3B Bio Black Bio, that there was some dispute around the distributor. They have India-based distributor. They have Delhi-based, I think, where there is some related party angle is there. Could you get some clarity on that part? 3B Bio. Hello.
you are audible, Amitabh bhai. We heard
Yeah.
you.
Hello.
Yeah, Akshay, did you hear Amitabh's question?
No, no, I couldn't. What is the
Okay.
question?
My question is that in past and 1 or 2 year back, there was a some allegation, some question on the there is one RP kind of a related party, but not disclosed, who is the distributor of his product. So there is some issue. There could be some possibility of leakages of margin or something like that because they distribute it through that only, and there is no other reason why that why the distribution setup is like that. That why there is a bulky distribution setup dependent on just one person who support. I mean, whose identity is not very clear.
Hello, hello.
Yes.
No, I don't think Amitabh bhai Akshay is able to hear. I
Okay.
will ask him to answer on the group, but would you like to go next? Because I think Akshay is traveling. So I
Okay.
think maybe you are the last person, Amitabh bhai, if you want not like to go it.
Okay. Sure. So, I think the theme of the this discussion has been like more of a contrarian. So, I'm also putting up a contrarian idea, which is Krishka strapping. So, the company is a semi company, micro cap company, which started with a strapping company, strap manufacturing. But strapping business has a limited time, so they moved to packaging, which is basically where they use strap to do the packaging kind of they it's like strapping plus manpower plus some SDP and some packaging stuff and packaging solutions, basically catering to steel players. So the end of consumer was has always been steel players, but now with the second raise of equity, they have set up a backward integration plant. The company's name is Krishka Strapping. So they are in the third version of their product, which has just happening in very short period of time. So people are not very sure about the modus operandi of of the management. But I've met the management, and I am a kind of I have a comfort in the sense that this guy has a good relationship with the all south based ecosystem. So basically, the company is sitting in Chennai, and they have a good understanding with companies nearby like Tube Industries, which are bigger player. Even JSW Steel, they have a soft corner with them because I've checked with JSW Steel, and they had given them a kind of credit understanding, a 7-day credit, which is rare for JSW Steel to give to Krishka. for a small player, because they don't give credit to beyond 7 days to Hyundai also, which is their largest customer. So that kind of credit, I mean, they have given to Krishka. So Krishka is a very small company, but supported by the ecosystem, because there is a need for a serious player to operate from Chennai. So it's a more of a locational bet. And now Krishka is trying to do is doing the backward integration, and they are backward integration of the of their main thing, which is steel. So they will consume 20% to the as a captive, and 80% to outside people who are auto manufacturer, and later on they want to get into precision engineering bit. So right now this is going now they are changing from a strap company, packaging company, to a specialty steel company. Again, the underlying remains the steel, but they are he is changing his position from A to B. A to B was totally related, and now C is actually a backward integration of A. But there is an open market where they have to sell the 80% of it to outside, and that how it takes off, that is optionality. So, and there is another optionality is in the business A, which is strapping, the sale order, which if it comes into big order from sale, they will be eligible on April. So April first week to April May, if they give a very good order, get a very good order from sale, any of the sale Bocaro or anybody, then their main business will also do well. So that is two optionality are there. One is the near term, and second one is it's slightly medium term. So, but the valuations are very low. The company is available at price to book of 2.4 or something, which is very low for us for a specialty chemical, a specialty metal player, and all the capex has been done. So every cost has been incurred. Now the only depreciation will impact the P&L, but the cost wise, most of the cost has been done. No further equity dilution will happen. So it was slightly a painful period for somebody who invested in between into this company, because the equity dilution was happening, has happened, and some of the famous corporate houses, their family offices have invested, like Sham Metal Lake and APL Apollo, which both of them are client, but I think APL Apollo house has sold their stake. So that's why the stock is down, and as because of the selling pressure from the market, the stock is not doing well, and obviously some game change is happening, that is also evident. So market has kind of valued it very low. So it's a contrarian bet, and so that's my idea.
And Amitabh, you don't see any issues in the cash flow, right, for this company?
Cash flow, right now the cash flow has slightly been worse than initially when we entered a year back. So
Yeah.
एक साल से cash flow में there has been issue, because the buyer as well as the supplier, both of them are larger. Like even they are buying from, let's say, JSW Steel खरीद रहे हैं उनसे, और उनको बेच रहे हैं, या किसी को भी बेच रहे हैं, वेदांता को बेच रहे हैं.
Hmm.
So they are slightly squeezed in the cash flow, but that's why they are trying to get into. But the guidance is that in 12 months from here, their cash flow issue should be resolved, because specialty वाले में this issue will be resolved. So 3 months में तो कुछ नहीं होगा. In H1, in H2, I think it should be slightly better than H1. So we'll be watching out for cash flow from operation to improve marginally in this quarter, in this H2. But in next H1, it should be significantly improved, because their new line of business, which is less cash, which is slightly more cash flow friendly, should come up, and that would be sizable. So the growth of top line will come from the capex which they did, the third business. So the top line growth is definitely there in next 6 months. A good decent top line growth would be there in 12 months. But we are watching out for the cash flow in 12 months to improve, and cash flow from operations should turn positive. So that is monitorable for me. That's right.
Okay. Okay. Thanks so much. Thank you. I think thank you, group. We will transcribe this on AI and share it with you. Apart from this, if there's anything that people would like to share on a non-recorded version, maybe I can request Arjun to stop the recording. We can do that, or else we can drop off, because it's, the time has gone way above what we had planned for. But yeah, any comments, any feedback, any questions, please, you may ask. Okay, so I think if there's nothing, we'll drop off. Thank you so much, team. We'll put this transcribe in the in the group, and Aryan ji, we can have this AI transcription, right, on the Thank you so much, Aryan. Thank you so much. Thank you, team. Thank you. Bye bye. Bye bye. Bye bye. Bye bye.